In the FX quadrant, taking a look at a back-to-back drop for the British pound, and that two-day loss, at least so far, has only taken the pound down about 0.45%. It's a low volume sell-off that began after the British pound made a 5-month high on March 12th. The high today was one spot 29.58, which was only up 0.05%, while the low 129.09 was down about a third of 1%, and as we come into the close, we're still down a little bit more than 0.2%. On a weekly basis, the British pound is near unchanged after last week's gain being the fourth week of higher prices in the last five. Last week was also the strongest percentage gain, going all the way back to the week of November 7th of 2022 for the British pound. We also had some disappointing economic data out of the UK economy this morning, with misses on January month-over-month GDP, a miss on the 3-month rolling GDP average change, as well as industrial production and manufacturing production also missing expectations. Looking at all of that data, the January GDP came in negative, as did the industrial production and the January manufacturing production. But the only number that was actually positive was that rolling quarterly GDP average change, which came out at plus 0.2%. The eco data could be the reason that the dollar was lower against all of the currency majors except for the British pound, where the dollar gained, as I've already mentioned. Now, today's data could potentially affect next week's Bank of England rate meeting, or at least the perception of it, where the Bank of England is widely expected to leave rates unchanged. We have no other significant UK data being released before that meeting, except for the unemployment data in the UK, which comes out only a few hours before the rate decision, and on its own, it's unlikely to change the direction for the Bank of England same day as the meeting.